and loss. We are just seeing the structure. Okay. Now for today, we need to see the question itself. So last time we saw what constitutes the statement of profit or loss. Okay. So in most questions, you'll be given a question like this one. This is a trial balance. Okay. Remember, in accounting, you first read what is required of you. Okay. So the required is where, let's look for the required part. This is where our question starts. I'll start from 4.3 because that's where, remember, this is a major question. It has 53 marks, as you see here. So it's a very serious question in the paper. So we have to look what the required. In accounting, what you do first, you read the required before even doing anything, because you read that information without, if you read it without knowing what to do with it, then you're going to have a very big challenge. Okay. So you must read the required first. Then you go and read the information. So the examiner wants us to complete the statement of profit, statement of comprehensive income, or which we call the income statement for the year ended 31st March 2019. Okay. Then you're required to complete this following notes to the balance sheet. Okay. So this one, the tangible asset note is 8 marks and the ordinary share capital is 6 marks. Let me see if there is another part. No. Then, after reading the required, we are given the notes. The trial balance. Remember, the trial balance always shows you these are unadjusted figures. So you'll be given a question like this one. You remember from our grade 10 and 11, you always given an income statement like this. The trial balance. Then after that, they give you the additional information. Okay. So what do you do? Okay, I'm going to go to that part. So the additional information is too much. Up to L, from A up to L. Okay. So what we need to do here, look at we are given firm figures for 2018 and 2019. But remember, we are required to prepare the statement of profit or loss for the year ending 2018. Now, this information is given to you, as in you see it here, but you need to know which information do I need to prepare the income statement. Remember, in the income statement, we need incomes and expenses. So we don't need to record the assets there, but we shall use them to just calculate depreciation. Loans, we don't write the full amount of the loan, we just need the interest there. So trading stock, we don't need it. So mostly we shall start our question with our sales figure. Remember what I explained in the previous video, okay? So our sales figure is how much? It's given as, so in the trial balance, the sales figure is given as, let me see, where is the sales here? Sales is 1,563,280. Okay. Now this is 10,563,280. Now, what do we do? You need to check if there is any information affecting this figure. Okay. So when we check this information, we have to find out. Remember, I said there are two things which affect your sales figure. Okay. Either the settlement discount received, granted, and the sales returns. Okay. So we need to look for those figures if we have them regarding the sales returns or settlement discount granted. So we have to go down and check. Check information A here. It says a credit note for 36,720 after deducting a 10% trade discount issued on 31st March 2018 was not recorded. Goods are marked up at 70% on cost. So a credit note. When do we receive a credit note? So our suppliers, sorry, our customers, if we give them a credit note, it means that we are reducing. So we issued a credit note. A credit invoice for 36,720 issued on 31 March was not recorded. Goods are marked up at this. So we issued a credit what? Note. To who? So this is our credit note of how much? 36,000, right? So if we issue, remember there is a word issue, which means we are the one who gave the credit note. So when do we issue the credit note? We issue a credit note to our customers, telling them that these are our debtors, okay? Telling them that, please, this is what, maybe they returned some goods, for example. So we have to do what? To give them the full what? So to reduce the amount of the sales. So what we are going to do, we are going to come here, okay, in our solution, and we say sales was how much? It was given as 1056 is 56. Just a moment. That is 1056. Yeah, it's given as 1056. That is 10,563,000. 563,200 and what? And 8. Remember that credit note of how much? They said it is for 36,720. So that amount, so we issue the credit note, which means we have to add it here. So if we issue the credit note, we have to add it here. So how much is it now? The amount we get is 10,600,000 what? 600,000. 10,600,000 if you add. So this is 1, please. Right. Now, we have to determine the cost of sales because we want to determine the gross profit. So we have to get the cost of sales and we deduct it from here. Then we shall get the what? The gross profit. So we have to go to the information again and look for the cost of sales. Cost of sales, was it given? Let me see. Where is our cost of sales? Cost of sales is given as 6,236,000. Okay. Then we need to check if there is any additional information affecting our cost of sales. Remember, we said that cost of sales is the price we paid to buy this what? This stock. Okay. So we need to check if we returned some goods that were damaged or we had some freight charges. Talk about if we imported our goods, freight charges. Talk about things like delivery costs. Delivery costs from our supplier. Import duty. If we pay the tax on them, we shall add them to our cost of sales. Okay. Now we are saying the stock was for how much? So remember, you need to check all the additional information to see whether you have a what? Whether you have anything which is affecting your amount. So this has to do with the closing stock data as was issued in 2000 not. There's an amount of that. So we don't need that. Adjust the provision for bad debts. Insurance for 5.1. Interest. Sorry. We need to check this again. An employee. This is insurance. What is it affecting here? We need to check. anything. This is for interest on loan, so it doesn't affect our cost of sales. Equipment sold for that. Interest missing. Interest income is the missing figure in the income statement. Then we have shares. I'm looking for something which is affecting our figure here. That is income tax. All right, let's check. Remember, we have to check the additional information properly to see if there is anything affect our figures. So let's check additional information number 1 and see what it says. A credit invoice of 36. Credit invoice of 36. Yeah. It was issued to whom? Okay, let's check the credit invoice was for how much? The credit invoice was for, and then they said that credit invoice of that issued on March was recorded. No, that one does not affect. So I'm not seeing anything affecting our cost of sales, but if we come across it, definitely shall look at it. But there's nothing affecting our cost of sales. So meaning, okay. Physical stock taking was this, data's 1,800, adjust for provision for bad debts, insurance for the period of journey an employee, interest, vehicle equipment, interest. So I don't see anything affecting our cost of sales. So our cost of sales is going to be 6 million. Okay. So our cost of sales is going to be 6 million. So 6 million, that is our cost of sales. So that's going to be our 6 million. So if there is nothing affecting our figures, so we just come and say 6 what? 6 million is our cost of sales. So this is going to be 6 million. Okay. Remember, we said that we are deducting it from our sales to determine the gross what? The gross profit. So if you get your sales minus cost of sales, how much do you get? So on my side, I have sales of how much? Sales were 106, 60,000, 600,000, 60,000. No, sorry, this was 600,000, sorry. 106, 600,000, there is another zero there, minus 6 million. Minus the 6 million, we are getting the 460. So 4,600,000, sorry. So our gross profit is going to be 4,600,000 what? 600,000. So now we look at operating income. Now remember that operating income is coming from this box, okay? Already we are given the rent income. So in the paper, what is given to you, don't waste time on it, okay? But we just use that figure to add it to other figures. So we have to look what for the rent, for the other items which fall under operating income. Okay. So we have Actually, this is called other operating income or operating income. There is no problem. So rent income is given. We have bad debts recovered. So we have to look for that figure. Where are our bad debts? Let me see. Bad debts recovered. Let's look for them. Where are the bad debts recovered? We have bad debts here. And bad debts recovered, we are 60,000. Okay. That is in 2019. Okay. Then let's check additional information if there is any information about bad debts. Okay. A correct invoice of that was that. A data of that was declared what? Insolvent. So 1.0 was received from a data JS listing whose date had previously been written off. The bookkeeper incorrectly credited the amount to the data's control account. Please correct the error. So there is another data here. Yeah, that's why I said it is important. Please never finalize with any calculation in the answer book before checking additional what information regarding that paper. So there is another data, Mr. Misting, J. Misting, whose date was previously written off, but they're saying the bookkeeper of our business incorrectly credited the amount to the debtor's control account. You see that? So he incorrectly wrote it on the debtor's control account. So it means that now we have to come and add this figure, which means this figure which is given in the trial balance, bad debts recovered, this is 60,000, is less by 1,800. Okay. Was it 1,800? Yes. So if we get the 60,000, so we are going to get, I'm going to go to the answer book and I say, this is bad debts recovered. Bad debts recovered. Don't have enough space. So we are going to get the 70,000, which is given. Sorry, we are given the 60,000 in the trial balance. We are going to get the 60,000. Just a moment. Okay. We are going to get the 60,000. Let me put it here. Plus the 1,800, which is given. So this is going to be how much? 70,800. Okay. Right. Now, the other item we have here is provision for bad debts. Provision for bad debts. Let's look for provision for bad debts in our trial balance. Provision for bad debts is here, but they have given us the one for 2018, okay, which is 30,100. So we have to come and reduce it. We have to find out any additional information on what happened to this bad debts. Okay. So the provision from last year is 30,100. So they are not giving us this one. We have to determine it. So let's go and check additional information regarding provision for bad what? For bad debts. Add just the provision for bad debts to 28,500. Okay. So they are trying to say that we have to increase our provision for bad debts to this amount. Now, the question is it increasing or decreasing? Remember, I explained the provision for bad debts from our previous lesson, and we said that this is the money you put aside to cater for all debtors who may not pay. So the provision for bad debts 2018 is 30,100. Okay. So we are going to come and do what? We are going to come and yeah, we are going to come and the question is it increasing or decreasing? What we have seen now, the new one for 2018, they are saying that it has to be now 28,500. So the question is, from last year to this year, has it increased or decreased? So it has decreased from 30,100 to 28,500. So if we say that if it's a decrease, we have that is income. If it's an increase, then that's an expense, which we write under operating expenses. So we are going to say provision for bad debts adjustment. We are interested in the adjustment. I'm sorry, I don't have enough space here. Provision for bad debts adjustments. So the adjustment is how much? The adjustment is the difference between the two. So you're going to get the 30,100 minus the new one, which is 28,500. Okay. And this one will give us 1,600. So here we have to put 1,600. So remember, why is it an income? Because if we reduce the provision, which means that income we are keeping it, the money we have spent, now we are keeping it in our business. So we treat it as an income. Okay. But we say that if it's an increase in the provision, let's say the 30,000 is the one for this year and the 28,000 is the one for last year, then it's supposed to appear under expenses down. Then the other item we have is what? I saw, let's go through the information. Under what? We need to check another item. If we have another item under other operating income, ordinary bad debts, interest, depreciation, consumables, rent income. This one was recorded for us. We don't need to deal with it. Let me check here up. Okay, so that one. We want to check if we received any additional income. Remember, we said that additional income can come because of sale of an asset, rent, commission income, etc. That is the other operating income. We need to check if we made an insurance includes, no, an employee, no, interest loan, no, actual depreciation, vehicle, actually depreciated at that. Equipment was sold, yes, thank you. So we sold an equipment. I think the item we need is here. They're saying equipment was sold for 9,000. You see this? Equipment was sold for 9,600, okay? Cash. On 28 February 2018. Remember, when is our year starting? Our year is ending 31st March 2018. So, which means it's ending March 2019, 31st March 2019. That's when it is ending. So, which means started on 1 Feb 2018. So, this equipment was sold in, let me draw you the timeline here, please. This is our year end, March 2019. Okay, so which means it started when? The year started in Feb 2018. So if you look at 31st August, let me just put it somewhere here. It is within our financial year, during the current financial year. Okay, so let me say this is 31st August 2018. Now, only the following entries in respect of this sale were processed. Cost price, so with this asset we bought it, 28,000. Actual depreciation at the date of disposal is this. Depreciation for the financial year was this. Okay, So at the date of disposal here, it had lost a value of 21,500, but the depreciation for the year regarding this asset is this 1,750. Remember, they are saying depreciation on the remaining equipment is calculated on 92,000 after taking to the above account. The above what? Right, now we need to know whether we made a profit or a loss on sale of this equipment. So we need to determine the cost. Cost is 28,000. Okay. Less accumulated what? Depreciation. Less accumulated depreciation. So on the date of sale, it had lost a value of 21,500. So this one must go off because we want to determine the carrying amount. Carrying amount is how much? So we need to deduct. Use your calculators, please. So it's 28,000 minus 21,500. So this one gives the carrying amount of how much? Of 6,500. Okay. Now it means that this was our book value. Carrying amount we can also call it what? Book value on the date of sale. Now, if this is the value we had, now they're saying the asset was sold for 96 what? 9,600. But the value of this asset was in our books was only 60,500. So what do you see there? The selling price, our selling price is greater than the book value or the carrying amount. So what do we see here? We are seeing that, okay, we need to get the difference to determine whether they made a profit or loss. So if this one is greater, it means that they made a what? A profit. And how much profit is that? We are going to get the selling price, which is 9,600. We remove 60,500. How much do we get? Let me see. 9,600. No, it's 9,000. Yeah, 9,600 minus 6,500. So I'm seeing there is a difference of 3,100. Okay. So we have to record that difference in our solution. So this is profit on sale of asset. Profit on sale of asset. So what is that profit? We need the profit, which is 3,100. So in the paper, after completing this, and you see that everything is filled up now, even you don't have space to complete the others. By the way, in the exams, they always give you the space. They don't give you bigger space, unnecessary space. They give you the space for the items which are supposed to be entered there. So this one means I don't need to go and look out for other things or to check more additional information if there is anything which falls under operating what? Income. So this one means now we have to add that all these figures, okay? And then determine the total operating income on top here. So we are going to get our 99,500 plus the rent income plus the bad debts recovered, which is 7,800. What students do always, by the way, they ignore this one which is given to them. Please, they want you to add it there. The 99,500, okay? Then we add on the 1,600 plus 3,100, okay? This one is giving me 112,000, sorry. This is 112,000, okay? Remember, this is also income as we did in our first lesson. So we add it to our gross profit, okay? So our gross profit is going to be, let's see here. Yes, so the gross profit, we are going to get that figure, this figure, plus this. So plus 46,000, sorry, 4,600,000. Okay. This is giving me gross operating income of 44,712,000. That is it. That's what I'm getting. 47,012,000. Right. Then the other part we are going to deal with are the expenses. Already they have given us the director's fees, water and electricity, telephone, audit fees, this one. So these ones are already recorded here. You don't need to adjust them. It means that they are correct. Now we have to look at the other expenses which are not recorded for us, and then we put them in. Okay. So where are we getting this information? We have to go to the trial balance. Okay. So in the trial balance, we are going to look for other expenses apart from what has been given to us. Okay. The expenses, let me look here. Let's check the trial balance. In the trial balance, they stopped on sundry expenses. They recorded all these expenses from here up to here. They are there in our answer book. Up to here. These ones have been done already, the way they are. Then we don't have salaries, we don't have employers' contribution, we don't have bad debts, we don't have consumables, all these ones. Insurance, we don't have it. Depreciation, we don't have it. Interest on loan, we don't have it. So yeah, we need to deal with them. So we have to come and look for what? Salaries and wages. Here it is given as what? They are giving us 1,280,000. So we need to check additional information if they said anything about salaries and wages. Okay. Let's scroll down and see if they say anything about salaries and wages. Salaries and wages. Part G, they are saying an employee left. Okay. An employee was left out. Who left out this employee? Our accountant. Okay. An employee was left out of the salaries journal for March 2018. So the month end of March, this employee was not recorded for his salary, but was paid. Okay. Or even if it was not paid, remember we are using the accrual principle here. Any expense or income which accrues or which pertains to this financial year, it has to be recorded. So even if it was left, so here we have to correct these adjustments we are doing. We are correcting all the mistakes which we are made. And remember, don't expect to find any, by the way, don't expect to find any question on income statement which does not have adjustments. So these adjustments we are doing, increasing and decreasing the figures given to us, this is where most of the marks are coming from. Okay. So this employee was left out and his net salary is 9,100. And they are saying the deduction by the employer totaled 30% of the gross salary. Employers' contributions were 2,200. So we need to know which amount was paid regarding this employee. Okay. The deductions by the employer totaled 2. So 30% of the gross salary. So the net salary was this. So if I'm to calculate 30% of that, let me see. 130 over 100 times 9,100. 9,100 minus 1,100 to 730, then plus employer's contribution of what? 2,200. Okay. Let me see. 2,200 plus 1,100. Okay. Gives us that. 30%. 330. Okay. You need to check out something. Is there any information pertaining the salaries? Salaries. Interest was that. Shares. Okay, we don't have any information regarding salaries. It means, okay, the net salary of the employee was 9,100. So if it's 9,100, okay, 2,200 plus 9,100, excuse me. Good. Plus 2,200, excuse me. Good. Minus. Okay. Need to check this. So they're saying that the employer had a net salary. Net means after deductions. And the deductions were 30% of the gross. So what is 30%? 130 divided by 9,100. I get that times 30. 30 divided by 100. 3549. 3549. 3549. Okay. Two hundred. 190. Okay. So we have to get the figure which is given to us, which is how much here? 1,000. So these ones are given. So we have to talk about salaries and what? Salaries and wages. So we have the 128. You'll excuse me, I'm not writing the figures here. I don't have enough space. We have the 1,200,000. We have the 1,280,000. Okay. 1,280,000 plus 9,100, which was given as what? The net pay. Then plus the employer's contribution. Okay. The employer contributed how much? 2,200 plus 2,200. Okay. So this one is going to give us 129. 129. So that is 12,991,300. Okay. So this is going to be 129. This one is not there. So that would be 129. Okay. 129, 1300. Then the other expense has to do with, so we have to go back to the question. So it's better to always record these items in their order in the trial balance so that you are not confused, okay? So we have employer's contribution to UIF. Employer's contribution, remember, this is unemployment. Employer's contribution to medical, pension, and unemployment insurance fund. So if the employer makes a contribution, okay, this amount is an expense to the employer, okay? So which means we have to do what? We have to increase, to recognize it as an expense. So the employer's contribution, sorry, was how much? 316,000. I don't think they said anything about it, so I have to go down and check if they said anything about this contribution. Okay. This one deals with the shares, income tax, interest income. So they never said anything about it. So what we do, we just put it the way it is. So the employer's contribution was how much? Let's check. Okay, let's go up a bit. It is 316,000. So we bring it the way it is. That is employer's contribution. Employer's contributions. We add them together. Don't say UIF, you what, medical, no. So we just say employers, contributions. So this one will be, we said it is 316 what? 300. Just a moment. Employers' contributions were how much? 316,000. Anyway, let's check if they said anything about it, by the way. Oh, they said that 202,000, sorry for that. They said 2,000 was left out for one employee. So this one must be added it also. It must be added there, okay? So if we have 316,000, you see, why it is good to always remember your additional information. We had already made a mistake here, okay? So remember there is an employee who was left out of this contribution. So we have to get, I'm not doing the calculations here. So just the add. We have 316,000, okay, plus the other contribution, which is 2,200. So this will give us 318,200. Okay. So this is gonna give us 318,200. Okay. Then the other expense, we have to go and follow them in their order. The other expense is about bad debts. Bad debts. So bad debts are given as 2,300. So we need to check whatever they said about bad debts. They are saying a debtor, debtor S Magnum was declared insolvent. His estate paid 2,000, which was 20% of the debt. The difference must be written off as a bad debt. So apart, on top of this one we have here, okay? On top of this, they are saying that, remember this one is already recorded, but additional information is trying to tell us that, please, there is another data whom we never recorded, okay? So this data is given as was owing 2,000, okay? But the company or its estate only paid 20% of the debt. So what is 20% of 2,000? 20% times 2,000. That's what was paid. Okay. So 20% of 2,000, 20 percent times 2,000, we get, that is 400. That's what I'm saying. I'm saying 400 here. Is it? His estate paid 2,000. Oh, sorry. We are making a mistake here. His estate paid 2,000, okay? So we don't know the date, but they only paid 2,000, which was 20% of the date. So we don't know the date. We have to determine the date. So how are we going to determine this date? So the date is always at 100, okay? So I will say 100, that is over 20 times 2,000. So this one is going to give me 10,000, okay? Oh, let me show you how I did it. This is some small mathematics. Remember how we do the sales and cost of sales? Yeah, that calculation we say. So we are saying that the date, the full amount was at 100, okay? So I'm given the 20% times the amount given to me, which is 2,000. So I'm finding this one. I don't know this. This 100 is what I'm looking for. I want the full date, which is at 100%. So when I say 100 over 20, which is given to me, times 2,000, don't forget this calculation. We use it when determining, please, when we are determining the cost price, okay? Selling price, cost price, we did that in grade 10 and 11. So the full amount is giving me 10 what? 10,000, okay? This one gives me 10,000. So this 10,000, remember it was the full date, but they are saying, okay, the company, his estate only paid only 2,000 of the 10,000. So how much is the bad debt? We're going to get the 10,000, okay, minus the 2,000 which was paid. So the 8,000 is a bad what? Is a bad debt. So we come back here. So we are going to add this 8,000 to this 22,300. Then we get the full amount of the debts we lost. Remember, bad debts, we said that these are the debts which we have lost or people cannot pay. So these are called the bad what? Bad debts. So the bad debts are going to be, we are going to say we have the 22,300 plus what? Plus the one we have got, the 8,000. And this one will give us, if you add 30,300, okay? This one will give us 30,300. Okay, another expense now. We see what we are doing. You don't read item by item, no. You must go read one item. If I'm dealing with bad debts, I go and read additional information about it and then I'm done with that. But if you start confusing reading everything once, then that's not a good approach. So we deal by item. Even there are some items I haven't looked at, okay? So you finish item by item by item. Then I'm going to another expense, which is called consumable stores, okay? Consumable stores, what does this mean? These are things like cleaning material we use in our company, the toilet paper, the tissue, all those things. Now, we have to look at the information. The trial balance given that we spent 53,200, cleaning on consumable stores, right? So we have to go down and check additional information about consumable stores. Right, here it is, okay? They are saying the physical stock. This one is very important. The physical stock account on 31 March 2019 revealed the following on hand. On hand. Remember, I explained the physical stock taking in our previous lesson. Physical stock taking, I said that this is where the company goes and counts the stock physically to see what is there, okay? exactly to see what is there in the company. Okay. So we count item by item in the business. We count our stock as we record it. Now, our books, remember we had bought consumable stores or cleaning material, tissue, etc. We had bought for 53,200. Okay. Now they are saying that this one is still on hand. We have trading stock of 334,500 and consumable stores of 3,400. It's still on hand, which means we have not used it during this financial year. When are we going to use it? Remember, this is the end of the year, the date they are giving us. So when are we going to use it? It means that we are going to use it the next financial year. So this expense does not apply to this year. And then it is included in this full expense. So the accountant recorded everything here that we have bought consumable stores of this. So what are we supposed to do? We have to go and subtract it from our figures. So get your calculators, work with me. So in my balance, you're going to say 53,200 minus, that is 53,200 minus what? This one, which is still on hand, 3,400. You'll excuse me, my writings. Okay, 3,400. So how much is left? 3,400. For me, I have 4,900. Sorry, 49,800. Sorry. It is 49,800. So that's what we have to record as consumable stores. I said I don't have enough space here, so some of the calculations I do them there, but please, you must show them here, okay? This is consumable stores, okay? Consumable stores is what we used exactly during the year is the 49,800, not the full amount of 53,200. Then we go and look, so that one we are done also, we go and look for the other expense. The other expense is talking about interest income. No, this is not an expense, so we have to leave it for now. Insurance, that's another expense. Remember, interest income, this is money coming in. It's not an expense. For now, we are dealing with only expenses, okay? So we have insurance. Insurance, this is insurance for the business, okay? Insurance is given as 79,500, okay? Then we have to go down and look if they are saying anything about insurance. You see what I'm doing? I'm not recording any item. If they are not saying anything about it, it means that the figure given to me is correct, okay? But the moment I go down and look and I find that there is any additional information about it, then I have to adjust this figure. It means that this figure needs to be dealt with, okay? So I have to go down. I can't record anything without checking additional information. For now, I don't know whether I said anything about it, but I have to confirm. This is what the mistake you students do. Some students, not all of you, sorry. You just go and record this figure there, okay? Then after recording, as you go down, you find that, oh, they are talking about insurance. Then you go and start scratching and you make all your work that, okay? Remember, accountants are always smart. Our work is always smart. So part F is talking about insurance. It's here. They're saying insurance includes an annual premium. Annual. It says it includes an annual premium of 51,000 paid for the period 1 Jan 2018 to 2019, sorry, to 31st December 2019. Okay? Now, we need to know how many months fall during this period of hours. Okay? 2. Yes. One, we need to determine, let's draw our timeline here. Remember, timelines are very important in accounting, okay? So if this is our, remember our year starts when? Our year is ending 31st March 2019. Okay. Let's say it ends somewhere here. 31st of March. This is 2019. But they are saying this premium was paid until 31st of December 2019. So when did the year start? The year started on 1st of Feb. Okay. 1st of Feb 2018. So we have to count 12 months to make the financial year. So we need to know out of this amount, which one applies to this financial year. Okay. So this 51,000 was paid for the period from 31st of March. Sorry, from the period 1st of Jan until 31st December. So let's say this amount starts here. Let's say this is 1st of Jan 2018. Sorry, 2019. Okay. Right. Now, we need to split this amount. Okay. And then what is paid in advance, we have to subtract it off. Okay. Remember, this 51,000 is included in this full amount of, which is given us in our books, in our question, in our trial balance as what? 79,500. But we're not dealing with the full amount, 79,500. We're interested in dealing with this 51,000. So this 51,000 has some amount. Remember, our year is ending here. We have agreed. So any period from here up to here, any payment which was made, we have to deduct it. So this 51,000, it's for the whole year. You can agree with me. They say that it's an annual premium. So we pay our premium, remember, which means we pay our insurance every 1st of Jan every year, right? So we need to get this 51,000, okay? We divide it by 12 months, which is 12 here, to determine the amount for each month. We divide it by 12 months. So 51,000 divided by 12, I'm getting every month we are supposed to pay an insurance of 4,200 and just a moment. This one gives us 4,250. When I divide, that's what I'm getting. Sorry, we don't have enough space here, but I'll fix my calculations here. Don't worry. So we are getting 4,250 for 1 month. Okay. So we need to know how many months we are paid in advance so that we can deduct it or we can subtract it from the figure given to us. So from 1st March until this date, how many months? You count with me. We have April, okay, May. Remember, this period here, let me just a moment, from 1 Jan to March. Remember, it was paid on 1 Jan 2019 up till March. This one, we don't need to, it's part of our expense during this financial year. But we are interested in what was paid after March. Then we deduct it, okay? So we have April, May, June, July, August, September, October, November, December. So I have 9 months, which we are paid in advance altogether. So I have to multiply this by 9 months. Sorry. I have to multiply this by 9 months. So this times 9. Okay. I have to multiply this by 9 months. So this one for 1 month, the reason why I divided it, I wanted to determine how much do we pay per month. Then I can multiply by the number of months which are paid in advance. Then we can remove the full amount. So when we multiply, we get times 9 months, we get 38,250. So it means that 38,250 was paid in advance. But the figure is given as how much? The figure is given as in the trial balance, we paid the full amount of 79,500. So I'm going to get this 79,000. Sorry, I'm writing in the wrong place. I'm going to get the 79,500. 79,500. Where is it? Here we are. Sorry, here down. So I'm going to get let me write it here on top, 79,500 minus what was paid in advance, 38,000. I'm sure you have it in your calculator. We have done this calculation already. 250. Okay. So when we subtract 79,500, I'm getting 41,250. So when I come here in my calculation here, I'm going to get, this is insurance for the business. Just say insurance. So we're going to get the 79,500 minus what was paid in advance, which is 38. What was it? 38,250. Okay. So if we get that 79,500 minus 38,250, we are left with 41,250. So this figure is the amount which applies to this financial year. Okay. This is the amount that applies to this financial year. Okay. So I would like to end here for today. Remember, the income statement is a very big statement. Next time we shall deal with the depreciation, trading stock, and then the other part down. Then we shall deal with them. So we are left with the two expenses in here. Depreciation, remember, it needs more time to calculate it and show you straight line, diminishing, all those things. Then after that, we shall deal with the last what? The last part here. And then we determine our gross. We shall determine our net profit after tax. So have a nice day. And we are continuing with the question where we stopped last time. Last time we stopped when we had got our operating profit. Okay. Our operating profit last time we got was, the operating profit was 74 to 74,742,000, right? Now, the last part which was remaining, we had to do the other part, this one, okay? Where we have to do the interest. We do the profit before interest expense. Then we get the interest expense, net profit before tax, income tax, and net profit after tax, right? Let me take you to the question here. By the way, even today, if time allows, we have also to do the property, plant, and equipment note. Yes, as the time will take us. So when we go to the question here, we have to look what the other part we have to look what is the part. Let me take you back here. What are we looking for? Remember, we are following the format, right? We are looking for interest what? Income. So we have to go to the question and look for that interest income. Interest income, let's look for it. Remember, where does interest income come from? This comes from if we received, let's say, interest on our, we had a fixed deposit, okay? So we always receive interest on our income, okay? So let's check in the income statement. They are saying there is no. We have to determine it. This is the interest income here. So we must determine it. So let's go down and see in additional information what they say about interest income. Interest on loan. Okay, look at part J. They are saying interest income is the missing figure in the income statement. You see that? So they are saying it's not given to us, right? So it will be the missing figure. We have to determine it. And how are we going to determine it? We have to use what is been given to us. What has been given to us, then we can determine this balancing figure. So they are saying is the missing figure. But remember, already we have from here, we are given, yes, good, we are given the net profit. It is here 991,000, not profit before tax. Now, I want us to understand this part, okay? Remember we said that it is a continuation. We started from up here, go down, go down, go down, up to this part, okay? Now, interest income. This interest comes from, let's say we have, yes, I said we have a fixed deposit. That's fine. Then we have profit before interest expense. Okay. Now, profit before interest expense, this one we are going to deal with after getting the profit before operating profit and interest income, we shall add them together. Then we shall get our profit before interest expense. Then after that, we shall determine our interest on loan or finance cost, which you call interest expense. We shall deduct it from here, okay? This one will be deducted from here. Then we get our net profit before tax, before paying tax, which is given as this, right? So what do we need to do? We need to determine, we are going to use this one, which has been given to us, the net profit before tax, and then we work back. You understand? We have to determine the interest expense. Then we shall work back, as we shall see. Okay. Well, we have to determine the interest expense. Interest expense. That is interest on loan. Let's look for interest on loan, information on interest on loan. Interest on loan, yes, is capitalized. A fixed monthly repayment, including interest, of 24,000 here. 25,500, okay? This amount was paid for the financial year. Now, what are we going to do? We are given the interest. They're saying this is the monthly installment. Remember, monthly repayment, okay? When you get a loan from a bank, for example, how much was our loan here? Let me take you up quickly. Our loan was beginning of the year. The mortgage loan, the loan beginning of the year, if you see, was 1,658,000. Then beginning of the year, sorry, end of the year, the loan is this. Remember, this was end of, this is end of 2018, and this is end of 2019, okay? Now, it means that beginning of the year, the loan amount was 1,658,000. Then end of the year, the loan amount, which is paid, remember, whenever we pay, the amount decreases, which we have to pay back, right? Remember, this is a liability. We got a loan from the bank, and then we have to be paying it back. But remember, we don't pay it we don't pay it only the loan. We also have to pay interest on it. Now, in the income statement, what we are interested in is the interest, not the loan amount. This loan balance will appear in the statement of financial position, okay? But in the statement of profit or loss, or call it the income statement, we're only interested in the interest which we paid on the loan, okay? Which we sometimes call the finance what? Cost. Now, let's try to understand this. Our loan balance, end of the financial year, is 1,430,200. But beginning of the year, which is end of last year, remember, end of last year, if you remember, was yesterday. End of 2018 was yesterday. Beginning of 2019, beginning of the financial year is today. Okay? Now, 161 the loan amount was this, end of last financial year, which was yesterday. Now beginning of the new financial year, which is today. So the end of the financial year is 1,430,000. Now, what do you see? The loan amount has decreased. Okay. Now, what do we need to do here? But they have given us the interest amount we pay. We are paying an interest, sorry, the installment, which is mentioned here. Let's go here. This installment, the monthly repayment, includes the loan repayment and the interest repayment. Okay, so if this is monthly, we have to determine how much did we pay for the whole year. So if the figure is given in monthly, we have to multiply it for the whole year, because we have to determine we are dealing with the whole financial year ending 31st March 2019. So I'm going to get the 25,400 times 12. How much do we get here? If I press my calculator here, I'm getting 300,000, 304,800. Okay. This is the full amount which was paid for the whole year, but this amount includes interest and the loan repayment. But we are interested in the interest here. Okay. Now, how are we going to do this? One, I'm going to come here and say, okay, let's go to our answer book. In our answer book, we are going to say, okay, the balance end of the year of the loan to be paid is 1,4. Sorry. We are not dealing with interest expense. We are dealing with interest expense, which is this. Okay. So let's check. Let's try to be sure. Let's go here. We said that, do you see here? The balance of the loan is this, but the beginning of the year was this. What does this mean? It has decreased. If it has decreased, it means that we have paid back the loan. But this figure, we only look at the loan repayment, not the interest. So, but they have said that what we have paid also includes the what? The interest. So I'm going to get the 1,4. Okay. We are going to get this minus, plus what was paid, minus the balance beginning of the year. Okay. So I'm going to get the 1,430,200 plus what we have calculated there, which is the 304,800. Okay, minus the balance beginning of the year, which was 165. Okay. A moment, let me erase this. We are saying the balance beginning of the year was 165,800. Okay. Now, what does this mean? We have the loan balance is this, and the loan balance beginning of the year is this. This is end of the year. This is beginning of the year. But this one has been paid during the year. Okay. Now, if it has been paid during the year, what am I going to do? This, remember, this amount also includes the what? The interest. So if I get this plus this, okay, if we add them together, how much do we get? 1,430,200 plus 304,800. I'm getting 173. Okay. Now, if you look at the 173, the balance end of the year plus what was paid during the year, including the interest, it gives me 1,735,000. Okay? But beginning of the year was this. When you look at those two figures, this figure is bigger than, this figure is bigger than this one. Okay? These two added together is bigger than this one. Now, what makes this figure bigger than this? The interest which we paid. Okay? So when I get this 173 minus this, minus 165, 8,000, the balance is 77,000. Okay? That is the balance. It means that this is the interest we paid on the loan. Okay? So if you get, okay, fine. That is the interest we paid on the loan, right? Now, remember, we are given this. Now we have to work backwards to determine the profit before interest expense. Then when we get the profit before interest expense, then we shall subtract it from this to get the balancing figure, the interest income, which they talked about, okay? So remember, to get net profit before tax, okay, we have already subtracted this, the 77,000 to come to 69,000. So if I'm working back to get this figure here, what am I supposed to do? I have to add back this to the 691,000, okay? So I get 69,691,000 plus 77,000, okay? So it gives me I'm saying 1,000 plus 77,000. I'm getting, I think you are getting what I get is what I'm getting is 76,800, okay? 76,800, right? Now, remember, this is our profit before tax. So remember, in accounting, if you are able, in a statement, if you are able to go down, you must be able also to work backwards. Okay? Remember, we do this when you're doing the cash flow statement, where you're given net profit before tax, and then you have to work back. Sorry, when you're given net profit after tax, and then you have to work back, adding back the taxes and etc. Right. Now, what are we going to do? The balancing figure they talked about here, let me show you, if I'm to remind you, the interest income. Interest income is where? This is interest income, somewhere here. Interest income is the missing figure in the income statement. So the missing figure they are talking about is this one. The interest income. So it was not given to us. So they wanted us to first work out to these ones down, given this the 691,000, so that we can determine the what? We can determine the interest income. So if I have, this is profit before interest expense, and this was my operating profit. So I have to get this minus this minus this, these two figures, okay? Then I'll get the difference in between here, okay? Remember, if you look at 768,000 here, it is bigger than this. What does this mean? Before we got to this figure, we added on the interest income. So for me to get what was added, I'm going to get this minus this, okay? So that one minus 7, 74, 2,000. I'm getting 26,000. 26,000. Meaning the 26,000 is now what was added to the 742,000 to determine this. Now, if you start now from here and you start going down, you'll come back to the 691,000, which is profit before tax. Now, after determining this, the reason why they gave you this, they wanted you to change your mind because some of you are used to work going down, okay? And you must be able, if you can work going down, you can also work going up. So that's why they hid these figures so that you can work going backwards and come back here to determine this figure. Right, now we go to the income tax. Income tax expense. I don't know if it was given, but remember income tax expense is always, yeah, it is. Let's look at K here. Okay, income tax is calculated at 28% of the net profit. The net profit before tax was 69,691,000. So we have to get 691,000. So we are going to say, to get the net profit before tax, sorry, the profit, the income tax expense, we are going to say, let me do the calculation here. 6, they say that it is 28%. Remember that you did that in class with your teachers. So we say the tax is always 28% unless it is changed, but the percentage is always the same, times 691,000. Okay, 1,000. So how much do you get times 28%? I'm getting the income tax expense as 193,480. Okay, now 193,480. That is net profit. Remember, sorry, this is income tax expense. Remember, it's an expense. We are paying tax to SARS. So it is decreasing our net profit. So net profit 691,000 minus 193,480. We get how much? Let me subtract here. We are getting to get, that is 1,000. So the net profit after paying tax is 497,520. Okay. So we are done with preparing the income statement. Then the other question they wanted us to do, just to wind up with the income statement, you saw where we started from. We started from our sales here, okay? Sales, cost of sales, gross profit, operating income, the way we did everything. Then expenses, we deducted them, okay? Until we reached up to here, okay? Then, that's it. Yeah. There is a figure we missed, but I'm going to deal with it. That was in depreciation. By the way, there was depreciation. Oh, in our income statement. Yo. So we had a depreciation somewhere here. Let me deal with it. The depreciation amount. Remember, depreciation is an expense, okay? Now, depreciation is given as, okay, I'll enter this figure when I do the PPE. Oh, it's fine. And we also had the trading stock deficit. Okay, those are two missing figures which we are remaining here. So the depreciation in our calculation was depreciation. Let's check our question here. Was given as what? Depreciation was given as in our trial balance. So we are given a depreciation on the equipment which was sold, which is this, okay? Which is only the equipment which was sold. But remember what is depreciation? Depreciation is when an asset loses what? Value, okay? So when an asset loses value, our non-current assets, vehicle, equipment, land and vehicle, equipment, furniture, machinery. So whenever we use them, they lose what? They lose value. That is depreciation. Now, we have to look at how much was the depreciation for the current year. Okay. The depreciation for the current year, I'm saying we are going to do it as we do the PPE, the property, plant, and equipment. Or before we do the PPE, we are going to say, yeah, we shall get this from the PPE. It's fine. We shall bring those figures. Then the other figure we had was the trading stock deficit. So trading stock deficit, what is this? Trading stock takes place when, okay, we shall also come back to that. It's fine. Let me see trading stock. Do we have trading stock here? 364. So in our books, we are saying that we have this, but the physical stock taking showed that we had how much? Physical stock taking showed us that we had end of the year 334. Okay. Then cost of sales. Just a moment. Our cost of sales. Okay, trading stock deficit, they said the trading stock we have currently is this, okay? But the trial balance is showing that we have trading stock of how much? What is the stock here? Trading stock, trading stock, trading stock. Yeah, we have this figure, 364,000, but we have the trading stock end of the year after the physical stock taking. Remember, I said that physical stock taking means that you are doing what? That is the actual stock when you count physically. So the books are showing that we have stock of 364,200. But the physical stock taking is showing that we have, after counting item by item, we have 334,500. So what we counted physically and what we have here, these are two different what? Items. So we have to deduct what we have is smaller than what we have in the books, which means some stock might have been stolen or anything. So what we have to do, we have to come here, trading stock deficit, and we say the 6, okay? How much is it? 36. Just a moment. The 364. 364,200. Then we remove the balancing, the last figure, end of the year, which is 3. When I record here, it will confuse you. Let me bring it here. You see the problem is calculating. Minus 3. Minus 334. 500. Okay. And how much do we get here? After subtracting, we are going to get how much is the deficit? 364,200 minus 334,500. Okay. The difference is 29,700. 29,700. Remember, this is an expense. Why is it an expense? Because we lost our stock. Okay. We lost our stock. Now, depreciation. Depreciation was calculated as follows. Let's do depreciation now. Remember, we have three types of vehicles here. Okay. So 3 types of assets. We have the vehicles, we have the equipment, then we have the land and building. But remember, land and building is not depreciated. Okay, does not lose value. But we have to depreciate the equipment and the vehicles. Okay. Now let's check information about vehicles. Information about vehicles is saying, remember, you have to look at the depreciation amount. So this is the vehicles. They are saying fixed assets and depreciation here. Okay. Now, vehicles, details for the 3 vehicles are as follows. We have how much? The details are showing us that we have a vehicle for how much? This vehicle was bought for, we have the first vehicle was bought for 350. The accumulated depreciation until end of last year was this. And the date of purchase is this. Then the second vehicle was bought 400,000. Accumulated depreciation is this, and date of purchase was this. The third vehicle was bought here. Okay. So what we need to do here, we have to calculate vehicle by vehicle. Okay. Remember, we are using 20%. So what am I going to do? To determine the depreciation on vehicle 1, I'm going to say 350,000 times 20%. Okay. Remember, we never sold any vehicle. So the depreciation on the first vehicle is how much? That is 350,000 times 20 divided by 100. I'm getting 7,000. Okay. The first vehicle during the year lost 7,000. Then the vehicle 2 lost how much? We are going to say 400,000. Okay. Times 20%. Okay. So it's gonna be 400,000 times 20%, which gives me 80,000. This one gives me 80,000. Now, remember, the third vehicle was bought when? 30 November. Okay? Remember the timelines which we did with your teachers? If I bring this here on my timeline, our year is ending on the 31st of March 2019. Okay? And it starts when? 1st of Feb, that's when it started, 2022. Sorry, 2018, sorry. 2018. Okay. Now, they are saying this new vehicle was bought 30th November. Let me say this is 30 November 2018. So, which means it was bought during the year, during the financial year. So we need to count how many months are left between here and here. That's when we depreciate it off. So when we are counting, we say 31st, we are going to say, don't count in November. They confuse you, by the way. They said in November, and you are going to do a mistake and count in November. Please. November, it was bought on the 30th of November, when the November month is already ended, which means we started using this asset on the 1st of December, which is December, January, Feb, March, which means we use this asset for this vehicle, we use it only for 4 months. So what are we going to do? We are going to get this 627,000, okay, times 20%, okay, times 4/12, because we only used it for 4 months, right? So we are going to get the 627,000 times the 20%, which is 20 divided by 100. So which I'm getting 125,400 times the 4 divided by 12. So I'm getting the depreciation regarding this one is 41,800, okay? Now the total depreciation we are going to have, we have the 70,000, which is this one, plus the 80,000, plus this one, which was bought during the year. So when we add these three, how much do we get? Wait. Was it 70,000? 350,000. Sorry, this was 70,000. And this is also 70,000. Not, this one is, it is 70, not 7. So we get the 70,000. Then we add on the 80,000. Then we add on the 41,800. Okay. So the total depreciation regarding vehicles is how much? We are getting the 191,800. Okay. Then we have also to calculate the depreciation on what? On equipment, because the figure for depreciation is written as one figure in the income statement. Now, equipment was sold for this on which date? 31st of August 2018. During the financial. Remember, the year started 28 Feb. Sorry, 1st of March. No, it started on the 1st of April, not Feb. Did I say Feb? If it's ending March, no. It is starting on 1st of April. Sorry for that. It starts on the 1st of April, 2018. So April, May, June, July, August, September, October, November, December, January, February, March. Those are 12 months. Yes, started on the 1st of April, 2018. Fine. So which means if this vehicle was bought on the 31st of August, sorry, if the equipment was sold on the 31st of August, it means that it was sold during the year after using it for part of the year. We used it for the part of the year. But now they are saying these are the details. All of the following entries in respect of this sale were processed. Cost price. This vehicle which was sold, sorry, this equipment which was sold was bought. This is its cost price. Then its accumulated depreciation on the date of sale, date of disposal. Okay? Disposal, remember, means getting rid of. Okay? So date of disposal, it was this. This is which means they're talking about this date. It has lost a value of 21,500. And the depreciation for the current financial year was 1,750. So this is depreciation. And this is accumulated what? Depreciation. So accumulated depreciation even includes what? The depreciation for the current year. Okay. Now, what are we going to do? We are determining depreciation right now. Okay. The selling price is not important to us as we talk now. But we're interested in how much was the depreciation. Now, remember, we have two types of vehicles now. We have the one which we still have in our business, okay? And we have the one we have sold, okay? So we need to determine what was the remaining vehicles end of the year. Sorry, equipment, we don't know. But they are saying it was 398,000 beginning of the year, okay? So what I'm going to do, I'm going to get the 398,000 and I'm going to deduct the cost price of what was sold, okay? Then I'll be able to calculate the depreciation for the remaining vehicle, which was not sold. So the total cost price is 398,000, okay? So I'm going to come here and I say, sorry, I'm going to say 39 to determine the depreciation for the remaining, okay? Equipment. So remaining. The remaining equipment means which was not sold. I'm going to say the cost price. So I'm going to say 398,000, the cost price, minus the cost price of what was sold, which is 28,000, minus 28,000. So how much is left? 398,000 minus 28,000, the cost price. I'm left with 370,000. So I have to multiply this by a moment. No. Depreciation on the remaining equipment is calculated. Sorry. We are wasting our time because even we are not given the percentage. This one was already calculated for us, which means the work has been simplified for us, okay? So we don't need to calculate the depreciation. It's already calculated for us, okay? So if it has been calculated for us, what do we need to do? So we are going to come and say the total depreciation on the equipment is the 92,500 plus the one for the item which was sold, okay? So, which means for the vehicles now, the total depreciation, we are going to get this plus this and plus this, okay? So we are going to come here. Let's come here to our answer book. Depreciation, we are going to get the 19. Sorry, I have to check the figure again. 191,800. 191,800 plus for the vehicle. Sorry, for the equipment, which was sold 1,750 plus for the remaining equipment, which is 92. Is it 92,000? Let me cross check and see. Yeah, it's given 92,500. So we don't need to calculate it. We are talking, even we are never given the percentage. Okay. So we are going to get the 191,800 plus 1,750 plus 92,500. So the total depreciation for the year was supposed to be calculated as 28,286,050. Okay. Remember, it's also an expense. So these ones, they are the remaining items which are remaining in our previous income statement from where we stopped last time, okay? From our previous video. So after entering these ones, it means that now we are sorted with the income income statement. So I'd forgotten to show you how these ones are written. I started on this figure. Right, now, what are we going to do? What we are going to do now, we have to look at the fixed asset, the property, plant, and what? Not the balance sheet, the fixed or tangible assets, which is called the property, plant, and equipment, okay? This is called the property, plant, and the equipment, which you call the PPE note, okay? Now, on the PPE note, I want to show you some things here on the note, but it's fine. We shall do this PPE in our next video. But remember, the PPE deals with non-current assets in our statement of financial position, non-current assets, NCA, where we have land and building, vehicles, equipment, machinery, etc. And mind you, you should only deal with those assets which are given to you. Like for this question, we didn't have equipment, machinery, please never deal with it. So PPE, it's also an item which needs its own time to be dealt with. Then we shall also deal with it when we meet again. So for today, we are ending here. When we meet again, we are going to do the PPE part, and then we shall be done. Okay. I'm taking you for accounting, grade 12. We are continuing with our next lesson where we stopped. Remember, the last lesson we did was about the statement of